The market is falling again. I don't see a full crash. THIS is just another routine. Deep losses are concentrated in specific sectors. SAM, ICO, NDU, CTORS, and AI infrastructure, tumble match or tech stocks face heavy selling pressure. The Nasdaq 100 is losing strength. Fast it was one of the strongest indexes weeks ago. Now it looks extremely vulnerable. The sell-off momentum continues day by day. Nvidia and Broadcom suffer sharp declines. Micron, AMD, Amazon all trade under pressure. Meta, Google, Tesla also move lower. The slump happens in the market. Strongest areas, the sectors, drive profit growth all year. The why attract massive investor enthusiasm. We end top performers. Fall investors take notice. Market sentiment has totally changed. Investors were greedy just 1 month ago. The mood turned neutral in the past week. Now the fear R and GRI at index drops down to 27. The market is filled with fear now. Please start to doubt overcrowded AI trades. Why wonder if valuations are too high. Top winning stocks are used to raise cash. Reports show investors flee tech stocks. The outflow hits a historic new high. ACCR into Bank of America latest client data. Investors sold 10.8 billion in tech shares last week. Total trading volume reaches 14.2 billion. It is the biggest tech sell-off since 2008. We need to figure out the reasons behind it. Three main factors lead to this situation. First, state of all investors take profits. Second, traders worry about crowded sectors. Third, people raise funds for bigger opportunities. A huge market event is coming very soon. SpaceX will launch its IPO this Friday. The company lists on the Nasdaq exchange. This blockbuster IPO draws wide attention. Big institutions take active positions. Retail investors also show great interest. THIS is more than a regular IPO event. It brings huge liquidity to the whole market. It also unlocks more future possibilities. For years, many firms stay private for a long time. Retail investors miss early growth opportunities. If SpaceX succeeds, more IPOs will follow. OpenAI and Anthropic may go public. Later, the public market will welcome new big names. The whole pattern may be rewritten soon. The IPO frenzy pushes equity supply higher than market demands. Enough buying power. Rented tech sectors are already overcrowded. High valuations add more pressure. SpaceX boasts a nearly 1.8 trillion valuation. It ranks among the world's largest companies. THIS is not a small growth stock offering. It impacts liquidity across all markets. SpaceX has solid business foundations. It dominates the global satellite industry. Its innovation and scale are truly impressive. A great company does not equal a good stock. Value at ION always matters the most. Its price-to-sales ratio hits an extreme level. There is little room for downside surprises. Investors must stay cautious at this moment. Merger or IPOs do not guarantee instant gains. Why big IPOs drop after their debut eve? And leading firms can see share pullbacks. The typical IPO cycle follows a fixed path. Happy builds up first, then comes retail. Rush lit. Why checks arrive after market debut. Stay stagnant for a certain period. Instead, UTONs accumulate shares gradually. Later, stare on fundamentals drive real breakthroughs. We cannot judge a firm only by its stock price. High valuation limits future investment returns. SpaceX belongs to mass case business ecosystem. Tesla, XI, No Rel, Inc. form a combined story. The attractive story also raises valuation risks. Stories can push prices far beyond real figures. The IPO itself is an important milestone. A bigger impact comes after share lockup and more. E-shares will flow into the open market. Index rebalancing will take place later. Passive funds and ETFs must adjust holdings. For seed buying will move the whole market. Key dates deserve our attention. The 18th of June is quadruple witching day. This year S&P indices add SpaceX to its components. FTSE groups also complete rebalancing. The 26th of June sees MSCI and Russell annual reviews. The 6th of July brings Nasdaq 100 official rebalancing. Even if you skip this IPO investment, the ripple effects will touch all assets. Investors sell old tech to fund new positions. Index funds purchase new large-cap stocks. Hedge funds trade around these index events. THIS week focuses on liquidity and share supply. The market tests its ability to absorb new stocks. Rec and tech sell-offs have two different reasons. Some investors exit the AI theme completely. Others sell winners to seize new chances. The two cases send different market signals. ROT ATI on between assets differs from full bearishness. AI is the core driver of current market growth. AI stocks contribute 60% of S&P 500 earnings. Pre-Saku rate on AI stocks. Spreads to the whole index. Massive spending on AI data centers continues. The total commitment nears $1 trillion. AI demand is real, but costs stay extremely high. SME firms will win in the AI competition. Authors face share dilution and rising debt pressure. Foot your winners, manage funds well and protect value. CLOUD revenue surges for many tech companies, yet stock prices drop due to profit concerns. Investors care more about real margins and cash flow. The why question, whether prices reflect all hopes. The AI trade enters a brand new stage. Now guidance do not come easy. As before in the early days, investors separate real leaders from hype chasers. Value at iron cash flow and balance sheets matter more. SEM ICO NDU CTORs face the biggest short-term stress. The sector becomes the most crowded trade. Long-term prospects remain positive. Overall show RT term expectations are being adjusted now. Earnings revision momentum slows down sharply. HIG leverage in trades starts to unwind gradually. Profit growth still exists, but the pace gets lower. A slowdown in growth can trigger market pullbacks. Current market differs from the 1999 tech bubble, so ID profits support today. As tech businesses still seek volatility rises amid high expectations. The market forms a K-shaped structure. Tech H used to be the absolute market leader. Other sectors lag far behind tech performances. If tech weakens, other sectors need to catch up. Broad markets will face bigger troubles. Market leadership is starting to shift. Capital flows out of overcrowded winning stocks. Money rotates into undervalued laggard sectors. Large cap tech stocks retreat recently. The broader market performs much better now. The trend may last for a period of time. SEM ICO NDUCTR demand does not collapse at all. TSMC's monthly revenue remains at a strong level. THIS is a normal expectation adjustment. Prices rose too fast. In the previous rally, the whole market is under a comprehensive test. AI long-term outlook still stays very solid. Show RT term pressure cannot be ignored. HUG capital spending drives the AI arms race. Private tech giants keep expanding aggressively. Supply chain conditions turn more favorable. Recently, chip and memory sectors show bullish signs again. Market corrections come from strong demand. Compound ILS need more chips and computing power. The core debate is about reasonable valuation. Global earnings forecasts are still moving higher. We should not fear every single market dip. Meta unviable inflation becomes a new concern. US CPI data stays above the target level. In flat iron pressure has not fully faded. The Fed may delay interest rate cuts. Energy issues push inflation higher again. Mid-East tensions affect global oil supply. Oil impacts transport, food, and manufacturing costs. Multiple pressure points weigh on the market now. Supply chain disruptions drive commodity prices up. UFA T2 range costs keep climbing steadily. The economy becomes more sensitive to inflation. HIG inflation leaves little room for market errors. STRICT valuation standards are adopted by investors. A great company can be A bad investment at high prices. Lessons from history still apply today even top enterprises need reasonable pricing. Nvidia trades below its 5-year average PE/PO PLO debate if more declines are coming or it creates a good buying opportunity finally. The situation applies to most AI-related stocks. Almost every investor has exposure to AI now. AI brings both huge opportunities and risks. Disrupt, till end risks, rise for established businesses, new startups, challenge. Traditional industry leaders investors prefer firms that benefit from AI growth and survive industry transformation steadily. The market chases new stories and hot IPOs. ABL-ish ad quality firms are temporarily overlooked. Meanwhile, solid companies trade at reasonable valuations. The why generate steady revenue and cash flow. We can find great value among these listed firms. S is not a full market meltdown. The market is tested by multiple challenges. AI uncertainty, SpaceX, capital drain, ICO, NDUCTO, pullback, and inflation risks. We can still find valuable investment chances. Sell ECT stocks carefully in the current climate. Focus US on firms with strong profits and balance sheets, sustainable lab advantages, and fair valuations. Her E is my what tell is for valuation, reset stocks, first stock quality, growth stocks across industries, Nvidia, Meta, Microsoft rank at the top of the list. ADP was TE Can, NAC, TO, NS, S&P Global and Visa, MasterCard, Booking, Home, EDAP, OAT and MCD, ONA, LDs, No, Nordisk. Zoetis also show great potential. SAC on defensive stocks for market volatility. Pepsi, Kimberly, Clark, Gen Era, Elmil LS, and BDX American, Water War, KS Kong, Stella N, NERG, Vic I Pro, Per Thai, SN Keurig, Dr. Pepper. Thai RD turnaround stocks with higher risk reward. Nick EAPS, Sta N, Ley Blay, Say and Decker, and Fis RV Global, Payment TS Disneycom, Casti and Sal, ESF, Orc E Clorox, Air Product, TS and Dom Ino SPs ZA. Che AP prices do not guarantee good returns. Some e-stocks stay low for fundamental reasons. We target firms with reset expectations, Bell OW historical valuations, and long-term growth potential. The C picks perform well if market rotation continues. Leak E and subscribe to my YouTube channel. Turn on notification for latest market updates. Get my free weekly market newsletter. I share undervalued stocks and key market trends. NKU. For watching, I will see you next time.